It's Thursday, June 6, 2019. Dow Jones closes up 181 points today based on the news that Mexico has come back to the table. They are now negotiating with the United States of America regarding the situation down at their border. It's the same lip service we continually get with the China negotiations. Everything's heading in a positive direction. We're back to the table talking, yet nothing has gotten done. And while we're negotiating with Mexico, the latest statistics are that we're going to have 1.1 million people entering the United States of America this 2019. Unvetted, unchecked. These people are just coming over. This is the number of people that we will be detaining, coming from all over the entire world. Okay, so while people wait in line and come in correctly, while they come in legally, we're going to have 1.1 million people coming in down at that southern border, unvetted, unchecked, and pretty much just cutting the line. So while we keep getting the lip service that everything's heading in a positive direction and everybody's talking and that negotiations are going well, every day a multitude of people, thousands of people, are coming into the United States of America. And this is going to have severe consequences for the United States of America in a multitude of ways, whether that be socially, whether that be financially, or whether that be for the safety and health of a nation. So with everything that is happening here in the United States right now, markets are up this week. Seems like there's not a care in the world, although we are going to have rate cuts. We are going to have QE4 coming, and I want to touch on that. Things are so good that we can look forward to rate cuts and QE4. And here's a concern. If we fell into a recession officially, I think we've already started it, but if we officially fell into a recession tomorrow, the Fed would be starting roughly at $4 trillion on its balance sheet, okay? That's with a T, $4 trillion on its balance sheet, heading into a recession, all right? With interest rates 2% lower than they were in 2009. They are not, a lot of people talk about bailouts. We've all talked about, the next bailout, the potential bailouts. How are they going to bail out anything when they have $4 trillion on its balance sheet and the rates are 2% lower than they were in 2009, and we're floating right now at about 2.25% to 2.5%. You need 4 to 5% to be able to drop. We would be negative 2.5% at this point if we had to drop 5%. QE, quantitative easing, worked in lifting asset prices, but it didn't work for the economy. We're talking about 2008, 2009. In other words, quantitative easing was a massive wealth transfer, and we saw that back in 2008, 2009. This was the biggest wealth transfer the entire world has seen. The middle class got robbed while the rich got richer. The biggest wealth transfer is coming, ladies and gentlemen, and this is why I repeat on a daily basis of why you need to be getting prepared. This is why I say this time and time again, that you must be protecting yourself, protecting your wealth. 2008 was just a warm-up, okay? They're suckering every last person into these markets that they can. They're trying to get people entangled in as much debt, as much household debt as possible, because when they pull the rug out, it's going to make 2008 look like kindergarten. As we watch the markets this week on fire, there just seems to be a huge contradiction with reality and the markets. Bureau of Labor Statistics, BLS. I'm going to just go over some notes here. If you work as little as 1 hour a week, even selling trinkets on eBay, you are considered employed here in America. If you don't have a job and fail to look for one, you are not considered unemployed. If you work three part-time jobs, 12 hours each per week, you are considered a full-time employee. These distortions artificially lower the unemployment rate and artificially boost full-time employment and artificially increase the payroll jobs report every month. So you can see how all these numbers are completely manipulated. This is why I don't believe that unemployment is 3.6% like they're saying. I see so many people having to work multiple jobs, and I don't even know how you can consider yourself a full-time employee when you're making $10 an hour. I mean, the wage growth in this country has not kept up with inflation. We talked yesterday, 50% of this country makes less than $31,000 a year. Wages are just in the toilet, and people are just not able to keep up. More news, U.S. factory orders, slowest growth since Trump was elected. Yet markets are up this week, not a care in the world. This is a real big warning sign right here. I was reading this this morning. Heavy-duty truck orders collapsed to worst numbers since July 2016, down 70% in May. These are Class 8 truck orders. May, 10,800 units were ordered, down 27% from the prior month. So we are down 70% year over year. I hear people telling me that, the retail apocalypse is to be blamed on e-commerce and Amazon and whatnot. Well, here's a news flash. Everything gets shipped by trucks, okay? So if you order something on Amazon, you order something online, it's getting shipped by a truck at some point. And when you see truck orders down 70% year over year, this is a really concerning number. Used truck sales in the Class 8 segment fell 13% in April compared to last year. I mean, this is really eye-opening. Here's an interesting article I read this morning also. U.S. home flippers are cashing out before profits get slimmer. They're getting out because prices are starting to fall in real estate. There's less price growth, less demand, and properties are staying on the market longer. So there is less profit to be made for flippers. The average return on investment, not including renovations or other expenses, dropped to 39%. That is an 8-year low in the flipping sector. They are getting out, I believe, while the getting is good. So that's another negative sign in the real estate bubble that we continue to watch inflate. And it's not heading in a very good direction. I want to talk about the term FIRE, finance, insurance, and real estate. This is very interesting also. In 1990, FIRE overtook the manufacturing sector in the United States in terms of contribution to the GDP. FIRE, again, let me repeat that, is finance, insurance, and real estate. This is the real estate sector. Real estate is now, today, the biggest it's the biggest, largest industry sector of the U.S. economy. In terms of value added output, it is now surpassing manufacturing by 0.8% GDP. Who would have thought in 1947 that the output of Americans' manufacturing sector would decline from 1/4 of the GDP to 11% and would be surpassed by the output of a bunch of real estate agents and house flippers? I mean, this is really scary. We are making nothing in America. We make very little here in America. And now the largest sector is flipping houses, real estate agents, and the real estate industry. It's unbelievable. When you read an article like that, it just reinforces why the American economy is so addicted to low interest rates. This economy cannot survive without extremely low interest rates. The real estate sector is highly leveraged here in America, And this is extremely dangerous. It must continue to have low interest rates in order to survive. Real estate deflation is what the Fed fears the most. It is coming. The asset classes are completely overvalued across the board, and reality is coming to America, and deflation in these asset classes is coming. And at some point, they're going to lose control of these markets. They're not going to be able to prop them up and manipulate them like they have been doing. And once they lower rates to zero, once they bring in QE4, that's going to be the end. It's not going to fix the problem. It is going to destroy the economy. These asset classes are going to come tumbling down. And I must again repeat, get ready, because no matter how good the stock market looks, in fact, we literally are in the beginning stages of a recession right now. We could be in a depression and these markets could be going up. So this is how detached the markets are from reality, Wall Street and Main Street. So I think we almost have to ignore what is happening on Wall Street because it doesn't have anything to do with you or I. It's not an accurate pulse of the American middle class, because the middle class has been gutted. There are very few people at the very top making lots and lots of money on Wall Street. Most of you are not. People that have 401ks, retirement funds, pensions that are tied up in these markets, I would be very, very nervous because I think down the road at some point, I believe they're going to be robbed. And I believe a lot of people in America are going to wake up one day and find out that they have absolutely nothing. They've entrusted these institutions and these very powerful elite with their futures, with their financial lives. And I believe, just as we were warned in 2008, that these institutions, banks, these elite are going to look out for themselves. And the more money they get, the more power they get, the more they can rob and destroy the middle class, the more powerful they become and the more authority they have. And this is what they want. They want to suck everybody in. You're not going to earn any interest saving money. So they're forcing you to gamble into these markets because you have no choice. If you save money, you're going to be punished. And so people are gambling their life savings. They're gambling their futures. And when this whole charade comes tumbling down, they're going to be wiped out. And the very few at the top are going to be even more rich than they are right now and more powerful than they are right now. So it's another reason why you need to be your own central bank, why you need to be putting away tangible hard assets. So I'm going to wrap this video up, but before I go, I want to touch base on one more thing. As we were just talking about hard tangible assets, precious metals, gold and silver. An interesting story that sticks out in my head today is the most recent news with Venezuela, where they've just defaulted on another loan, having to give up $75 million in gold to Deutsche Bank. Now, about a year ago, they defaulted on a loan with Citibank here in the U.S. Citibank had given them $1.1 billion. They put up $1.1 billion in gold at that time. Defaulted on a loan. Citibank kept the gold. They'd also had $1.2 billion of gold confiscated by the Bank of England because of what is happening down with Maduro. They didn't want to give the gold back. So again, if you don't hold it, you don't own it. The Bank of England would not give Venezuela their gold back because they didn't like Maduro. So it's amazing though, this barbaric, archaic metal that people say have no value. It's ancient history. It's all about new money, cryptos, etc. We see Serbia and the Philippines now increasing their gold reserves. We see literally every central bank increasing gold reserves. Again, Russia, China, Germany, India, the list goes on. Everybody is running to gold. Gold has been up every day this week. So people can sit there and deny the importance of gold, but it's amazing how Citibank, how the Bank of England, how Deutsche Bank have no problem giving you that paper fiat money and taking that gold. That gold is never going back to Venezuela. So again, more countries coming in and beefing up the gold reserves. Remember, if the lights go out, and this is no hit on cryptocurrencies. People ask me my opinion on cryptocurrencies. I am not into cryptocurrencies. I'm not saying that they're good or bad, but here's my problem. What are they backed by? They're backed by nothing. Secondly, if the power goes out and your computer doesn't work, what do you do with a cryptocurrency? Like, if in the worst case scenario, we have an EMP, we have a cyber attack, what do you do with a cryptocurrency? If a country bans cryptocurrencies, what do you do? So it just seems to me that the government can watch everything that you have when we start getting into electronic money, cryptocurrencies. Look, the US dollar now is electronic money, right? Banks don't have literally no cash in the bank. It is just a click on a keyboard. There's your money. And when you go to the ATM to deposit a check, it's just clicks on a keyboard going into an account. And when you use that ATM card or that bank card, that debit card to go somewhere, that store is not getting cash. They're just getting numbers and zeros through a computer. So really the US dollar now is really being used as electronic currency. And so it seems to me you give up a lot of privacy and a lot of information by using electronic currency. So I favor gold and silver. I believe that it is God's money and it's got a 5,000 year history. I believe that it is much safer, much more private, indestructible, and I can use it whether the lights come on or whether the lights go out, whether a computer is working, if it's not working, and it is recognized around the world as real money. I can go to any country in the world and people know what gold is. They know what silver is. Now they may not understand every dynamic about gold and silver and its traits and its financial ability, but they know when they look at a piece of yellow metal, that's gold. When they look at a piece of silver, that's a piece of silver. And they know that it has some amount of value. But what about a cryptocurrency? People, like, if things really hit the fan, are most people going to run to cryptocurrencies, or are they going to run to something that they can pick up and grab with their hands and look at it and feel it and know that that is real money? Again, it's not a knock on cryptocurrencies. I'm sure that there's a place for it. I'm sure that there's a future for it. But I believe in really extreme times, you're going to want something with a 5,000 year history that the entire world recognizes. So that's where I'm at. That's my belief. You may have a different one. Comment down below. What do you think is the right place right now to be putting some money? Is it cryptos or is it solid assets? And of course, we can talk about food, water, gear, security, all that. But financially, is it cryptos or is it gold and silver? I'd like to know your opinion. Comment down below. Guys, have a phenomenal day. Have a great week. Talk to you very, very soon. God bless America.